Raghav. We're here to talk about the spread monster, IV walls, and I look into the new updates as well. We can start, I think, with the IV wall section. All right, so what is an IV wall? MG in a town hall the other day put it really well. It's an option implied price boundary derived from the price of risk. It's a high probability area for reversion or a session cap. It works best for highly liquid indexes like the S&P. It also works for the NASDAQ on QQQ as well. It's also a make or break point to determine an outlier move formation that forms from a positive feedback loop of market maker covering or hedging that drives price continuation beyond the writer's expected range. All right, we can go to the next one. So an IV peak is the option implied price magnet, where range within the peak zone provides maximum profit for writers as options decay. It's the least risk pricing by writers. Price action is most likely to exist in range within that zone. So this is a high probability area of price action existence, especially range or chop in this area. Breaking out from this zone, from what I've seen, often results in a trend towards the direction of the IV wall, and falling back into this zone often results in compression or lower intraday volatility. You read the capture. First, in the box marked number 1, these are called convexes. These are where you read your IV walls and your IV peaks from. With these black spaghetti lines called or marked with the number 2 are curves representing past price action. The apexes of each side of the curve represent the past high and low of day of a price action from whatever aggregation point you're starting from. The purple bar, when live, represents the range of price action over your selected capture. And then an important difference to note, the high-low versus weekly matched capture. High-low matched, you wave 1 daily, 200 days to load projection, or excuse me, position from pivot, while the weekday match incorporates data from the past however many Tuesdays, Wednesdays, Mondays, etc. So how do we derive these walls? First, you want to maximize the spread monster and stretch the screen as wide as possible. You want to place your crosshair at the pinhead of the curve in the convex. This is where you'll determine the value for the convex once you determine the IV wall. We've seen a few different values that act as important markers from these convexes. These are the inner IV wall, the true IV wall, and the overflow IV wall. As you can see, the last curve with a pixel, white area gap between the crosshair line and the curve generally represents the inner IV wall. The first curve without a pixel gap between the crosshair and the curve, where the curve is not completely flat, represents the true IV wall. And then after that, you mark the next convex as the overflow IV wall. It should look a little bit flatter than the true IV wall, and this represents a gateway value for outlier price action, roughly. You can see here, this is from Q's a few days ago. This is an example of the same size crosshair being placed at the pinhead of each curve. You can sort of see where the overflow, true IV wall, inner IV wall, and then the next convex outside of the wall zone forms. So how do we find our IV peaks? You want to maximize your spread monster, stretch it as wide as possible, place your crosshair at the flat end of the apex of a curve, and that is where you determine the value of the peak. You do not determine it from the pinhead of a curve. The peaks are the steepest convexes on either side, which is the highest profitability for writers. You can see here, I've marked the steepest curve. You can, if you really look closely, you can sort of see where that curve forms. That is the peak IV zone, or the peak IV value, right? You can see other sharp curves that are not the peak zone, right? These are not the steepest curves. So while they represent a higher profitability for writers, they aren't the true peak zone. Here's another example. It's actually a little bit deeper than you'd normally see. Other curves, even though they look to be sharp, they're not the peak zone. So this is what your final zone should look like if we could put those on top of each other with the steepest curves being represented. This area is the highest profitability for options writers specifically. It allows the contracts to decay adequately for them to buy back their sold contracts. A little bit here about how IV walls are important for the market making mechanics as well. We can use the OMM feature to determine a good look at the market. So typically, as market makers sell options contracts and expect a range, if price begins to sort of get to the edge of one range, market makers will buy the opposite position to sort of hedge a bleeding position, right? I've explained here sort of what the exact actions are, but you can generally see it form on the OMM where we outside of the put lines on the call related lines, you can see interesting price action or interesting action, excuse me. So these are an example of some general setups I've seen form with the ivy peaks and walls, right? You either overnight are trending towards a wall for reversion, and then you fall back to the peak zone for price compression, or you start out around the peak zone and then trend to one other wall. In a few different complex setups here that I've listed here. These are less guaranteed. Of course, it's more of a subjective look, right? The general setups are what price is the best way to look at this market, but you can see some behavior here with interest like false breakouts of the peak zone and reversion back before price actually trends towards a wall. But so far, 100% of the time on the S&P over the last few weeks, I think it's been 3 weeks now or so, over the last 15 trading days, it's price action has touched either IV wall 100% of the time and reverted, right? So it's been within that wall zone 100% of the time and reverted roughly from that zone. Setups based on walls, right? Eventually, one day, although we haven't seen it yet, these walls will break. And when that wall breaks, there will likely be a very high volatility of continuation beyond that wall. This is where you have outlier trend formation. I tend to see this more on Qs. It hasn't been seen on SPY since we've been collecting data, but on Qs, you often see runs into positive exposure on either side once you break these overflow zones. Then using SPY, once the S&P trends towards its IV wall and starts reversion, that generally follows with a reversion on Qs. Something else we haven't seen happen on the S&P is a failure to test either IV wall during any session of the day, right? We haven't seen that. Typically, you would see some sort of compression around the peak zone. Hasn't been seen yet, though. The past few weeks, as you can see, just looking here, you can sort of identify some certain setups, right? Peak to wall moves, wall to peak moves, some complex setups as well. Even days where we touch both walls. That's been over the last, I think, 4 of 16 days. That has happened, right? That's about 25% of the time. So can provide some extreme leverage plays, especially later in the afternoon using that sort of a setup. Example of the IV walls on a futures chart using ES, right? This is Milk's chart. As you can see on the downside, price dips slightly into that IV wall zone, breaks through the white dotted line outer wall into the zone towards the true wall, then sharply reverts all the way back up to the true IV wall on the upside, right, on the call side. It's pretty amazing stuff. Huge leverage opportunities. Now I'm going to talk a little bit about the spread monster density map. It's a great confluence to use with IV walls and other fractal confluences, right? Here's an example from Friday. This is an hourly capture that I did on the S&P using the Wave 160, right? Price action, we're in an outlier move, right, during the beginning of the day, that downtrend, right? We revert from a high probability, high contrast area, which represents a high probability of reversion, right? At about 3 hours after open, you see that sharp reversion all the way up to where our next IV wall was coincidentally, and also a high contrast, high probability area of reversion. It's an amazing way to use this tool on multiple time frames. Hourly is a little bit less accurate from my experience, but on Friday, this provided a prime example of seeing price in high probability areas of existence. Another example of a capture from, this is using the weekly capture, right? You can see as we're in a downtrend this week, reversion on the macro time frame, right? This is the entire week. The weekly low created in another high contrast area, right? This is showing price typically does not, continue down from this area. It only happens a handful of times, as you can see below that line, right? It's a very clear area of reversion or continuation of an extreme outlier move, right? It's a low chance, but it's possible. Can we move on to the next? All right, there we go. um, so here's an example of the odds map, right? I don't see a lot of people using this, but it's a valuable way that incorporates the data from the density into a different look, right? Each of these lines represent the high and low of days in the same way that apexes of curves represent the high and low of days, right? You can see if you look very closely at the groupings of these lines, you can identify high probability areas of price action, right? You can see that I've highlighted in white common areas of price, even some strong bearish moves. There's a certain line which beyond that 517.31 area, you have barely any possibility of price moving beyond that range. It's only happened 3 times out of the last 250 days, right? This is for Friday. Our low of day was in the 518 area, corresponding roughly with that 14.81% odds on the right side that you can see. Pretty interesting stuff, right? And then, oh look, let's see the top side, right? We had a critical line of resistance at that 525.40 area, and then continued beyond all the way up to another roughly in the 527, 528 area, around 14 to 11% odds of occurrence, right? That's a double outlier move in one day. Pretty interesting stuff to see. The volatility map, I've already made a video on this that you can go watch where I go way more in depth with this, as well as the density, but I'll just give you a quick overview. Here, we're looking at the 50%, 25%, and max outlier values from the same capture as the density or the odds. In the middle, at this white dotted line, you have the apex, which represents a point of inflection for price action pretty generally. These long and short medians are a common range for price action to occur, right? I'm pretty sure the statistic is around 90% of the time either median is touched during the day. Then you have these wall long and wall shorts, which represent another gateway for price action to either generally move beyond in an outlier fashion or revert in a normal price action fashion. You can see it captures 75% of the volatility generally of the market over whatever period you selected. You can see the percentage odds for the max outliers as well over the last however many days you use. Here's an example of the volatility map done over a week's time frame, right? This is 4 days ahead aggregation due to the holiday. Normally you would do 5 on SPY, right? Those yellow zones are the 200 and 500 weekly long, weekly short medians. The green, as you can see, are the weekly wall short and long at the very top. You can see SPY did this common pattern that I've seen occur about 4 of the last 6 weeks on Qs, ranging somewhere between these two median zones, breaking out to the short wall or long wall and then capping the week, right? I haven't been tracking the data on the S&P for the volatility metrics, but this is a general pattern that I've seen happen numerous times on Qs. Again, I have another video covering all what I've seen there. Understanding probability is extremely important for trading using these confluences, right? Probability does not guarantee the occurrence of anything, right? All you're seeing is the historical occurrence of price action, right? And so you can assert, history rhymes with the future, right? The future will generally follow some sorts of movements that we've seen in the past, but it's not guaranteed. It's a binary setup, right? There's two events. There's a high probability event and a low probability event, right? Let's say we're at the edge of a high contrast area on some time frame for the density. There is a high probability of reversion, but you need to accept the risk of an outlier move formation for continuation and consider that and trade using that risk at the forefront of your mind. It's also important to confluence with multiple other fractal tools or other trading tools and watch live action and follow your plan to determine a way to capture price movement. Now, I'm going to talk about yesterday because this is one of the most perfect trading days I've seen for either side in a long time, right? At least for the option side. You see market makers go off sides twice during the day. What I'm talking about earlier with IV mechanics. The white arrow, if you can see that, that's showing an abnormal volume of hedging beginning immediately at the start of the day, right, for downside. It's very, very rare you see that happen at all. Usually that dark green line is flat, right? Then that red arrow is signifying that bearish OMM divergence. That is another thing I'll cover at a later time, right? But you can also see that hedging in that green line representing, I think that's calls above volume, is still going up pretty rapidly, right? And then you can see at that green arrow, something else begins at the same time that initial hedging volume started, or excuse me, reverted, right? You see upside hedging begin with that pink line rapidly rising, right? That's the opposite form of hedging for market makers. And then look to the right. That corresponds exactly with the reversion for the day, right? Extremely interesting stuff to note, especially, on the S&P specifically, where this is derived from. We're tapping our outer IV wall zone at the same exact time we're tapping the floor from the OMM, and then you see a hard reversion form where market makers who are expecting a massive continuation in the sell-off suddenly are offsides and need to hedge their bleeding positions. We use those density-based high probability reversion areas that I was showing earlier. We determined multiple possibilities for reversion over the weekly, the daily, and the hourly captures even provided us with multiple confluences to expect reversion. Right? Then we also had a high probability reversion area at the weekly session cap, right? Very easy stuff here. That pattern that I talked about before, a range between the median zone and capping the week at either side wall. 4 of the last 6 weeks on Qs, I have seen that happen, right? That's, I mean, you can take what you want with the numbers, but it's a common occurrence that I've seen, especially for trend weeks. All right, and now here's Raghav to talk about wave projection.
So wave projection analysis is one of the most important tool I've noticed in the fractals. Now you can use this tool with the density graph also. I'm going to show in a bit. So there are two ways of using this wave projection analysis I have noticed. First is the mean wave. See, the mean wave is actually like a really important target as well as a important level for reversals. In the next slide, I've shown it. Y- Uh, Next to this, yeah. So basically, you can see that on Meta yesterday we had a really good gain of 3000%, and this was a really important confluence for it. And you can see that we actually were at the mean wave, and then if you see the after result on the right hand side bottom, you can see that we definitely saw a really good reversal from it. And I've also some other examples. Please move to the next slide. Yeah. So this I shared this setup on the trade launch, like this was on Thursday, I believe, and you can see that how beautifully we rejected from the mean wave, and you could have really seen a really good gain from this. And I also have another example. Please move to the next slide. Yeah. So this one was on QQQ. So basically, you can also see that we actually reverse uh from a intersection in the mean wave. You see that if you see that the pink line that is moving through that mean wave, that is the intersection. Now, in some instances, you might see that we actually reverse from these intersections. Now, this is quite less probable, but this one setup formed yesterday, so I thought that this should be shown to people so that when it comes out, yeah, and you can use it properly. So you have definitely seen that how useful this thing can be. So I've told about the wave projection analysis, about the intersections. You can see that the price tends to follow one line until we hit another intersection, and if we reject that, and basically we can see a reversal from there. Now, Miva, can you move to the first where we had the last line of defense wave? Yeah. So here, this was a really, really good setup on Marna that you can use the wave analysis for. And you can see that we actually had no other wave above this wave, and just because of this wave, we had a really, really good reversal, and you could have easily made 100% depending on your entry, of course. So yeah, this was the main way of using the wave projection analysis, and this is the way I use it. Now you can actually I could tell you about the mean wave is that you can use the mean wave as your important target, because I have seen way too many times in these past 2 weeks that we have reversed from it. So I'd really suggest that if you see that we are actually near a mean wave and we are actually taking rejection from it, there is a high probability we actually reject from the mean wave. Now, one more thing I would like to tell about the mean wave is that sometimes you will see that the mean wave is actually like really close to the pivot. Like on the Myrna chart, you can see that the mean wave is actually quite near to the pivot. But can we move to the next slide? Yeah, but here you can see that uh no the yeah. So here you can also see that we actually are the mean wave is actually quite far away from the pivot. So that just potentially shows you that we have more potential for the downside in this case. Now, if we see a mean wave forming to the upside, then of course we can say that we have more upside fears. So there's high chances that we can see a more big move to the upside. So this is another way of using the mean wave. So these are like little things that you can also notice by yourself. You just need to see these charts like one like for a week or two, and then you will automatically start getting setups from it and start recognizing setups. So it's not that difficult as people think it is. So we can move to the next part. Yeah, so this video actually shows the intersection. Can you please pause the video? Yeah. So basically, you can see that the white waves you can see, and you can see that we actually reverse from actually nowhere, because you might be seeing that, okay, I don't see any kind of wave reversing. So actually, we had an intersection setup on the left side, that uh, little wave. Amiva, can you like show it? No, like on the left hand side. No, above the pivot, above the pivot. Yeah, just above the pivot. Yeah, so here you can see that we actually had the resistance, and we actually reversed from there. We were actually following the first wave here, which had the high quite above the price, but actually we reversed from the intersection. So this could have been another setup of the intersection. So this is quite important stuff to actually look for. And please resume the video. Yeah, so another, we had the last line of defense setup. So you can see that we actually had the last wave here, and we actually took support from it. And definitely, if you resume the video, we actually went above the pivot. So it's like a really high probability setup that you can actually play on. And you can also see that we actually had a really good reversal, and we saw about 1,000% gain on the calls too, along with the puts. So yeah, this was an actionable setup that you could have played. Please move to the next one. Uh, the screen has actually paused. Yeah, so the Trade Like a Pro update. So basically, this is a really funny tool. You can say that. So basically, you can read the specifications of these features, and I will share my screen very soon to actually show the live of it happening. So can you move to the next slide? Yeah, so basically you can see those eyes. Those are those that is the trade manager. Those eyes actually look the imprints on the right hand side, those 80% band, those 50% band, and that 33% band. So it's like that. So it actually looks at the next potential targets for price to go. And you can see that we actually form the happy sun. So it basically says that we might have come out of the trend. Now, this is not like 100% guaranteed, but yeah, this can be a really important tool if you want to use it for looking at your charts and just instantly know that what's going to happen. Because like you might not have to give a reading if you have just remembered that, okay, I need to look at XYZ things on with the help of Trade Like a Pro. You just need to just trade, not looking too much into deep into the charts. So this can be a really useful tool if you are in a really hurry to take your setups. So yeah, I think so that now that's Bigun's part, I guess.
Oh, yeah. So do you think you can go one more slide back? Because I was just showing a setup from yesterday using the trade like a pro on the 1 minute at 12:43 p.m. I think I see a happy sun and a rocket print on the wave 51 minute, right? We're also following that wave projection, sort of kind of compressing there, as Raka was saying earlier, right? And so now look, let's mark that on a trading view chart and see the price action for the rest of the day, right? You see that right there? That's about 1.8% move on SPY from that. I mean, again, you won't always see such a huge volatility setup like that. But if you're just using the trade like a pro alone and you just, take some calls, grab some ES longs, right, using that signal and some other confluences, can produce some insane moves. So now let's talk a little bit about the importance of execution, right? You can have a 99% or 100% win rate strategy and still lose. This is the most important part of this meeting that you should be listening to right here. So listen up, right? You need to understand where your setup comes from, right? You need to do your homework, watch the videos, read the Russell guides, right? That actually are showing you the mechanics of how our setups are derived or other people's setups, right? You need to create a set of rules to take this trade. These are your own rules. They shouldn't be anyone else's, right? And you need to take your own confluences from multiple tools, whether it's the fractals or other tools, right? That's how you form high probability trades. Secondly, you need to follow them. This is key, right? You can't let your emotions or your impatience guide your trading. If you do that, you will lose. You can have a 100% win rate strategy, but if you're impatient with your entries, you're impatient with your wins, right? Your take profits or your stop losses, you will lose. It's imperative to follow rules. You can mathematically derive rules and really define your risk well. Follow them and accept the risk, right? There's always a risk of your setup not working. There's nothing is 100%. So prepare for it. Trade with capital you have, right? Don't empty your bank account and put it all into a Robinhood options account, right? That's a horrible idea. Trade with capital that you have, with capital that you're most importantly comfortable with losing, right? That's imperative. Prepare for risk. That's the key. So now we can open up the floor to questions, or if Raga wants to share his screen with the Trade Like a Pro as well, whatever we're thinking here.
Yeah, I'll share my screen. One minute.
While we wait, maybe we can, if anyone has any questions they want to type in the chat for either one of
Yeah,
us,
we can
for a quick
first
answer,
go
we
with
can
it.
do that.
Hey, so I had a question. The mean wave move, is there like a better time frame to use that than others?
Can you repeat that one more time? It's a little choppy on my end.
The mean move, is there a better time frame that works than others for that?
Yeah,
Well,
it
Raga, what do
works
you
the best
think?
on the wave 10-15 minute. Yeah, it works the best on the wave 10-15 minute and wave 7-60 minute. These two are the ones that are actually I've tested more, and I've also tested the wave one daily, but it can be used as a target, but not as a potential reversal area. Yeah,
Okay, someone said, how
Okay, thank you.
long has this been back tested for? You mean the IV walls? I think that's been a few weeks now, but of course, there's a lot more to the system. When is the mean wave slash trade like a pro coming out? No, I have no clue, but we'll share setups based on it. Make sure we're on top of everything old and new education wise. What channel should I start with and just grind on watching it all? Video guides is key, Russell guides as well, secondarily.
So I just saw in the chat that there's a playback feature. Any possibility of seeing how that works?
Yeah,
yeah, I can show that.
yeah, of course. It's the right slider on the bottom right. It's the one to the right of your screen that'll play back, essentially, as far as I know.
I mean, that's huge. I just never knew it was there, so that's why I'm a little bit excited.
Like, is my screen visible now?
Yes, it's visible.
Okay, great. So this is the actually look back feature that we have in the fractals. One sec. Yeah, so basically you can go through different, let me just make it a bit clear. So basically you can you can just move the slider to actually go back in time and actually back test all those new features also and the old features. Like I actually sometimes in like I just do this and actually test the mean wave and how it performs. So basically this is the backtest feature that we have in the fractals. So yeah, any
I
other
can see it.
questions?
Someone was asking about other trade like a pro objects. Maybe we can just like play back, look for a little. I don't know. We can just see how those have played out in the past, bro.
Yeah, yeah. So like let me just use a better like time frame. You can actually read the rules that we have here and screenshot it for now.
It's also been included in the slide presentation. I'll put that.
Yeah, great. So then you can like start your commentary on it. Okay, I'll just animate it.
See that rocket printing right there, right? Just looking back, how that produces a high volatility move to the upside.
You can also see the spark and see what it actually means here. Gold burst, you can see that might have a sustained rally, so it can actually show you that we can have a trendy like move from here. It's actually not 100% guaranteed, of course, but it can be really useful to identify our setups. Of course, then you can see that we had a really good move after that. Let's go a little bit back in time.
So you can see again
Yeah,
that
again
rocket
the
printing
rocket we have here.
insane stuff.
Yeah. Yeah, and look at the trade manager. Look how it's like looking at those imprints and telling you that this will be the next target for the price to reach. Like again, we had the rocket here. Then of course we did not have the sustained move because of even though we formed the spark because it's not 100% guaranteed.
And just to clarify, the rocket is signifying that the purple vector line might hold a support. And so what you look for invalidation of the rocket is for purple line to start disrespecting the purple vector support and see Mario throw down his hammer attack that can cause price to move down below vector and below pivot.
Yeah, we will have the Mario now. You can see that we actually have that Mario here. See how it's like smashing the candle down below the pivot.
And then that flame, watch as we go below pivot. When you see that flame, that's implying a high volatility move forming rather than compression. After we move below pivot, you'll see that.
You can again see the trade manager telling you that this will be the next target for price to reach. So basically just looking at the imprints and telling you that, yeah, price gonna go there. You can see that we had the flame here. So it's basically implying that we're gonna have a volatile move here. And I'll explain the standard deviation in a bit. First, we need to get over the trade like a pro feature. See that again, a rocket here telling that we are above the vector, so this can hold as a support. Basically, I just want to show, yeah, again the Mario action below the pivot, so it's below the vector. So it's gonna try to make the price go below the pivot by just smashing it with its hammer.
Hey Raghav, some people are saying they
Yeah,
can't see. Do
here.
you think you could possibly reshare?
Oh, really? Okay, so
I can
I'll
see it. I don't
try
know what the
to.
issue is. I can see it.
Okay, I can try to just share again. Okay, I'm gonna share again.
Thank you.
It should be visible. Like, is it to you guys?
So right now, what I'm seeing, Raghav, is like the dice rolling or whatever. It's like a loading screen. I can try and share mine as well. Pull it up.
Yeah,
Maybe Milk if he wants to as well. I think we should also maybe touch on the average pullback, the open and close stuff. Maybe just a tiny bit here. I didn't
y-
think about that until now,
yeah. I
but
mean, like we are having technical difficulties, but I
yeah,
have to
yeah,
touch that topic for sure.
yeah. I can share it for you. So, what would you like me to pull up?
Like you can pull up the like wave 10-15 minute of any stock.
Okay.
I have no problem.
All right. I'll just pull up Meta since I think that's what you were on. Just give me one moment. All right. I'm able to do the fractal now if I can just get share permissions. I don't have stream permissions.
Are you not able to share your screen or something?
Oh wait, now I have the permission. I just didn't have like a permission to or whatever. Hold up.
Yeah.
All right, can you see my fractal?
No, currently it's like loading.
Okay. I'll just give it a minute and then we'll see. You see now or no?
No, this is a problem from Discords, and I believe.
Yeah. I'll try again. Do you think maybe we could have like Milk or Amiibo share perhaps to just touch on the average pullback and the triangles as
Yeah,
well?
that would be great.
Or Russell, hold up. He's also raised his hand.
Oh, I could share, but I think my thing is a bit bugged.
Yeah. Russell has his hand raised, by the way. I don't know if you see that.
Yeah, I invited him, but I think he
Okay.
has it.
Oh, how does he lower his hand? It's okay.
Yeah, Miva's screen is visible.
I can see your screen as well, Mima. Yeah, everyone's seeing it. They can see it. Perfect. Can you possibly
You
pull
have
up
the
like the
linear
10, 15,
charts
10?
on. Yeah, so basically you can just tick all the options so that people can have a better load wave 10-15 minute. It will be better. Yeah, perfect. Like you can just start moving the slider now. Basically, you can see that we have formed the rocket as we are above the vector. So basically, it's trying to show that we have as our support here. Okay, yeah, great.
In the meantime, someone just asked me, can we hear a little bit more about the relationship between SPY and QQQ and their correlation in responding to walls and peaks? So these are sharing a basket of similar companies, right? Of like a few like very high market cap tech stocks, right? So that's sort of, I guess, why they can almost follow each other. But certain days there will be higher volatility for the S&P versus Nasdaq and vice versa, right? Generally, what I see is the Nasdaq has higher volatility, and so subsequently, because it's also less liquid, right? The S&P is the most liquid market outside of the bond market, right? The Nasdaq is less so, so its IV walls and peaks may be less accurate to determine the general market condition for reversion or whatever you're looking for. And but what I have seen is that so if you can sometimes see setups around the peak zone or the IV wall for reversion on SPY, generally the Nasdaq will follow very well, right? So let's say the S&P is reverting from its IV wall, right? The same will generally happen with the Nasdaq. That's from what I've seen. Even though we can say perhaps the Nasdaq may be outside of its IV wall, right? It's past the overflow. But if the S&P is reverting from its overflow or IV wall, whatever wherever it's at, the Nasdaq will generally follow.
Okay, so yeah, has done us a lot of work here. So we need to first talk about the bullish slash bearish filter. You might be seeing that you can actually see that we have a 10% filter above the pivot and 10% filter below the pivot. So it's basically trying to show that we have uh, we actually have 90% chance that we break this filter. Now, as we move, can you move to the 80% or 90%, something like that? So, for example, let's say that the price reaches somewhere around the 80% filter. Now, it means that there's 80% chance of reversal from there, and there is only 20% chance that we might see a continuation from there. That can definitely just show you probable statistics for reversals. And yeah, this is a really simple tool, just like we have the probable band. So it's kind of similar to that, and you can actually like combine those two things to actually decide your setup. So this was just about the filter. Now can you just click on the S slash R triangles, those average and the longest? Yeah, great. So actually you can see that uh, yeah, thank you. So basically, you can see two triangles at the highs. For example, look at the H19 on the left-hand side of your graph. We actually have two triangles. Now, what it is trying to say here is that average 25 aggregation. So what does it actually mean that? So here it actually trying to show you that on an average, it should take around 25 days to actually take out that high. Of course, we did not do that, and for the longest, it actually shows you that we actually can take 80 days to take out that high. These are the just like temporary problems for the fractals right now, because like there's too many people on it. So like we are really sorry for this inconvenience.
And while we have any difficulties, floor is still open for questions, of course.
Yeah. Now you can see for the H20 on the right hand side, so it's like saying that on an average it should take 25 days to actually take out that high. And for the longest, can you just move the slider a bit so that we can see the longest triangle, Miva? Like the slider down there. The slider on the, no, like on the right hand side. You can see the slider just above the days to load. You just need to move that.
If anyone's on the fractal right now, to hop off that because it'll help a little bit with the memory issue. I don't know if anyone's really on it, but this is because of network congestion. Also, Milk, I've noticed you like unmuted. I don't know if you were meaning to talk or not, but if you are, we cannot hear you at all.
Yeah, I'm having issues.
I can try again to share my screen. Hold up. Like, is my screen visible now?
It just is dice rolling right now. I'll try. I'll try again.
Oh, Rogo, just leave the stage and like leave everything, like restart it.
All right, my fractal is working. If you'd like me to share, I can just share while Raghav talks.
Yeah, so yeah, please share your screen.
Okay, if you can enable permissions again, I'll be able to. So right now it says I can't stream. Yeah, there we go. Yeah, Milk, if you're trying to talk, I have no clue what the issue is. Maybe if you check inputs or something, but I can see you're unmuting. All right, let me share. Okay, can you see the fractal? Oh my gosh. There's no way. Hold up 1 second.
Yeah, I can see your screen. Okay, so this is Mr. Milk's screen. Okay, great.
Okay, so do you want to talk about trade like a pro or pull back? What would you like to talk about, Raghav?
We can actually talk about those uh S/R, like those triangles.
Oh, good
Like, can
idea.
you please
Okay,
right
so
click
graphs.
and go to graph settings? Like on the graph settings.
Yep.
Yeah, on the like on the extreme left hand side, you can see those S/R triangles, average and longest. Yes, this. Okay, so great. So you can see that on SPY, we actually can see that we have the H20 on the right hand side. So basically, it's saying that for the shortest triangle for high, but of course we did not do that. So the next will be the longest. Can you please just move the slider just above the days to load to the right hand side, like the slider just above the days to load? No, the left hand
The
side
middle
one, just a bit on
of
the
the
left.
graph size.
Yeah, yeah. Can you that just move that to the right hand side? Yeah, great. So basically, you can see that now for the longest, or for that H20, it's saying that we can actually take 103 days to actually take out that high. So actually, if you might be wondering that how am I supposed to use this for myself? So basically, it will be much more beneficial to use it on the smaller time frames, because then you can know the longest time that we can take to actually take out that high, and it will be very useful to you to identify your setups. And if we can move to the wave 10-15 minute, it would be like more beneficial. Yeah. Can you please
And
reload
something
the graph? Can you please reload your graph, sir? Yeah, you can click on the QQQ wave 10-15 minute. We can start with that, of course. Okay, so great. So you can see that we actually have that one left high. You can see that for an average, it's saying that we should take around 51, like 15-minute candles to take out that high. And for the longest duration, it should take 150 15-minute candles to take out that high. So basically, for example, you can say that we are actually like below the duration of the average aggregation and say that we are around the 20% band. So you actually have a good probability that we can actually take out that high since we are inside the average aggregation. So basically, this can be really useful when you might be seeing a QQQ or any stock in the outliner range and there's like one to two highs left to take out. So this can actually tell you that this might be the day or can actually take some more days to actually take out that high. And this was the main function of these triangles here. So yeah, I'm done with it. So we can actually move to the average pullback. Please click on right click on your graph and graph settings. Yeah, then you can actually click on average pullbacks, like average pullbacks, like yeah, below it. You can unclick it. You can unclick the S/R one. Yeah, just click on the average pullback below the hotkeys splash help. Yeah, this one. Right. So basically, it just says that, for example, I'll just try to explain in very simple words what it's trying to say. Say that the H6 was the like the high before we go below the pivot. So it's trying to show you that the projected path that the price can take if this is the maximum high that QQQ can reach for this instance here. So basically, it's gonna show you that we should have a pullback of, you can see on the bottom right. Uh, we should have a pullback of minus 3.82 points. It should take on around 11 aggregation. So it means that it should take 11 15-minute candles to do that. And it also shows that if H6, which is the 451.76, was the capped slash top, means that it was the high that, and after that we won't form any other high. So that should be the pullback. So the red wave you can see here actually shows you the path that the price can follow. So yeah, this can actually be a really helpful tool to actually decide your targets. And you can actually see on the left hand side of your graph those black lines. Those actually show the actual pullback, and the average pullback is actually taken out from them from all the previous data. So yeah, this can be used just as your target, and actually you can actually measure the volatility with it, that how many days can it take for your target to be hit. And yeah, this is the simple usage of the tool. Now the most important one we can use is the standard deviation. Can you please maximize the standard deviation for me? Like the standard deviation down there. Yes, this. Can you
Back
please
clicking.
maximize it?
Bollinger.
Like the, yeah, this one. Yeah, exactly. Great. So here you can actually just, if I go through the basics, so basically it's actually expect a really good move, or you can expect a volatile move. You can actually go through the previous charts and see the reaction with it. Now here I'm gonna be talking about the K and M signal, and this is probably the most useful one. Basically, for the basics, the K signal, whenever it forms, it's just trying to show you that we are going to have a bullish move. Simple. And if you see the M signal, so basically it's going to tell you that we are going to have a bearish move. You can see that just above the Mr. Milk's cursor, you can see that we had a really, really good bearish move. And actually, some of the guys in the trade lunch made 1000% gains with those signals because of the M signal. And for the K signal too, whenever it forms, you can expect a bullish move. So we actually formed the K and the M signal like in 2 days only. So for the K signal, we had a really good bullish move again. So basically, for the more detail, you can say that the more smaller the time frame is, the more inaccuracies you will see with these K and M signals. And like if you increase the time frame, you can actually get more accurate signals. That is why I really suggest you to use wave 760 minute. You can see that we actually have much more accurate signals of the K and M, and they are comparatively less like uh, close to each other, which means that they are actually quite high probability compared to the signals we had on the wave 10-15 minute. That is why, like, if you actually go on the wave 7 daily also, you can actually use that there too, because then you can actually take out your swing trades with that. To see that actually we have much less signals with this with the K and M, but they are much more accurate compared to the smaller time frames. Like just recently we had the M signal, and you can actually see that we had a really good bearish move with that. So yeah, this can actually just tell you the direction we can move with the help of with the help of this tool. We can actually decide the direction price will move, because earlier we only had the idea that okay, we are in this squeeze, so basically we can just expect a volatile move, but we don't know the direction. But now with this form the M signal, we will get a bearish move. Simple. So you just go with it, and you can actually make uh really good gains with that. And some people are actually like must be wondering that okay, so in the standard deviation, can I actually predict the reversals? So I can actually tell you that whenever on the smaller time frames, can we move to the smaller time frames, please, Mr. Milk? Like wave 10, 15, yeah, great. So basically, on the standard deviation, if you see the standard deviation flattening, so basically you can say that, okay, now if you just see that this thing forms, so you can just make out that, okay, we are gonna have a reversal here. So I might need to just get out of the trade I'm in currently. So whenever you see the, can we move to the like the left hand side? Can you move your cursor to the left hand side? Those in the 1.5 standard deviation zone, like in the standard deviation only, like in the 1.5 standard deviation zone, you can see that. Yeah, you can see that we actually have that flattening of the standard deviation, and after that we saw either have a reversal or like a come in the price action. So this is the main usage of the standard deviation. So yeah, these were the actual new features we had in the fractals. So I just told you that how you can use it and the basic concepts with it. So I'm done with my part, and we can just move to begin.
Just a quick note that I had on the symmetrical triangles and the average pullbacks. So right now in the current version, they are only showing the moves that transition, or the average pullback. They only show the transition move from upside to downside in respect to pivot, and then the symmetrical triangle only shows moves that are from transitioning from the downside to the upside right now. So right now I don't have much else more to say about the new updates, but again, the floor is open for questions. I'm sure I see a lot. Someone's asking what contracts I choose. Do you usually choose highest, lowest, median? I'm not exactly sure. That's asking the strike for a contract on the weekly swing. It's a little bit more nuanced than I'll talk about for right now, but I'm not sure if that's the question.
For the
So you can
intraday,
also,
I can actually tell that how can one uh you're trying to speak something like. Yeah, so
oh,
I was saying that on the for the intraday, I can actually tell you that how I look at contracts. Can we look at the wave? Yeah, great. So basically, I actually look at the contracts which are actually placed at the 20%, 10%, and 5% bands. So basically, those are our potential targets for the day, like the maximum targets for the day. Of course, we can actually have outliner moves, so we will not consider those. For example, you can say right now we are above the pivot and I want to go for a put contract. So I'll look for the put contract with the price of 442 somewhere around there, because you can see that we actually have the 10% band below the pivot in the 442 range. So that will be my ideal contract for the intraday, and because that is a target for us to cover. So yeah, 20%, 10%, and of course 2% ban, and the 5% ban if you have that. So that will be my ideal contract to choose. And this is like very, very useful, and it's working for me as of now.
someone's asking about IV walls. Given what strike do I select? So, okay, I guess you shouldn't be selecting the contracts in the spread monster for deriving IV walls. So you pull up again, me, Milk and I have made a video on this. I also made an earlier video on this, right? You load up your density, you put it on the wave one daily, right? 200 or 500 days to load, they're about the same, going to be the same results. You want to select your weekday matching. Then from there, you're going to go to select the date of the day you're looking for, right? So usually this will be the next like day, right? If let's say market closes, you're looking at tomorrow, right? If you're looking at the weekly walls, you're looking at the Friday contract expiration, right? So using that, right, we can maybe even just like take a look at where those walls would be right now, right? Milk's pulling it up. So let's just talk about maybe Monday's IV walls for SPY, right? I want to select that the contract of Monday, right? Maximize, and then we can take a look here. Yeah, click that Monday one. It's very imperative you're clicking the right contracts or else you're completely off. Right. So just taking a look here, we can see already from what I'm seeing, this is actually pretty interesting. Like this, just looking at the peak zones right now, it's actually it's very rare to see them kind of skewed like that. Already, it looks like we might be skewed for some downside on the S&P just based on that peak area, right? You can see the green last price. Our peak zones are completely outside of that. Something to look at for Monday. Um, you can also see that the IV walls are implying that there's a low volatility, right? They're pretty about right there is our IV wall, I think. No, maybe I can't really tell if there's a gap. Hold on, I need to full screen. Yeah, so there's a gap there, so that's our outer wall, right? Next one below should be, yep, that's outer for sure. It's roughly our true wall. Nope, there's no gap there. It's pretty flat. And the next one beyond would be our out overflow value right here, where milk is marking. So hopefully that explains what you should be doing when you're deriving the walls. And for the peaks, it's that steepest curve, and you're basically catching like the apex of the steepest curve, if that makes sense. You're putting your crosshair right on that. If there's any more questions about IV walls or how to else like to use these, that would be pretty useful right now to answer. I guess looking for SPY right now specifically, I'm also just seeing for Monday that high contrast area between the 523 and 524 area is an area for reversion from a downside move. That's just something to look for that I'm seeing right now. Sort of coincides with where our IV wall zone is as well, and our peak zone. I would say right now, just for Monday, just quick bias. I haven't done any analysis for the next week, but it looks like there's some possibility for downside, especially based on the skew of these contracts. It looks like the center of market makers' expected range is like like at least a point below the last close, right? So that's just something to watch for sure. High low matching, select date. Yep. Or no, actually, I would say generally it depends on how much data you have for your capture, right? You want to have somewhere between 30 and 50 count in the statistics tab, right? You'll see kind of when what milk is showing here. Um, if you go to that statistics tab, you can see the count right there, right? That's how many days are in this set, the specific position, right? So let's say your count is like 5 or like 10 maybe, somewhere in that area. You want to select the weekday matching, right? It'll that will give you a much more accurate picture of the data. Right? And so you just do the same process where you select weekday matching. Now you can see, oh, look, there's 40, 50 counts there, right? Gives you a much more accurate picture of the data. When distinguishing IV walls, okay, again, wave 1 daily, 200 days to load. That's how you that's the capture there. Theoretically, always use weekday matching. Again, it just depends on the data set that you're using. Generally, you want to look for a count of somewhere between 40 to 80 plus, for your data. The more data you have, the more accurate the walls are going to be. So when you're looking to distinguish between whether to use the high-low matching or the weekday matching, look for the one that has more data, right? For tomorrow or for Monday, at least they're pretty similar, right? The high-low matching versus the weekday matching. So you're going to get about the same result. Oh, and so I guess something else important to talk about for me from me and Raghav, this is for multiple different views of the market through the fractal. This is for density, this is for wave projection, right? They're all the same thing. We want to talk about last line of defense setups. So it might be helpful to look at perhaps, let's see what Raghav's showing. Oh, okay. So maybe go back to the fractal graph and turn on the wave projections for the QQQ wave 10 15 minute the last Friday. It provided Spy and QQQ yesterday provided an amazing last line of defense setup, both of them on the wave projections.
I
So
actually
Yeah.
prepared like a small presentation for it. I can actually share or to Mr. Milk so that he can share his screen with it. Okay.
Okay. Maybe yeah. Let's maybe Amivo can share whoever. I don't know.
Yeah, please, Amiva, share your screen. Image I sent you. Yeah.
Perfect.
Okay, so my my point to show you this graph was to show you the last line of defense right here. You can see that on the first weekly chart, we actually have the last line of defense wave, and after that, you can see that we have a really outliner move straight to 431.62. There is actually very less probability of us reaching there, but like now on the daily, that we have the similar setup to the weekly middle graph. See that we were actually at the last line of defense wave, and you can see that how we reversed from it. And you know, I just told you about that call gain we had. Now, can you just move to the right hand side, please? Yeah, here you can see that this is the last line of defense wave, just like the setup we had on Marna. You can see that we actually had the wave here, and after that we actually have no other wave to actually give us more downside. So basically, it's like showing you that okay, so this might be the end of the downside here, and we might have to reverse from here now. And yes, we definitely reverse from there, and you can see that on the next graph, we actually had a really good trade. So basically, I was trying to share that the density graph life is related to the wave project analysis, talking about the mean wave and the last line of defense wave I have noticed. And yeah, this can actually give you extra confidence for your trade. And yes, you can definitely play with it. So this was my point that I wanted to share about the density plus the wave analysis graph.
Perfect. Well, let's see if there's any other questions around. I think that mostly wraps up what we'd like to talk about. Um, yeah, ask questions, raise your hand or text in the chat, do whatever. Let's answer some questions. Any commentary slash observation on extended trading hour sessions responding to IV levels? Yes. Yes. Grab them after close, right? During the futures close. Grab them if you can. I have Milk and I have both seen it. I've seen it on Qs. He's seen it on the S&P. That it respects those levels overnight, right? You can, and especially let's say there's a big news day, right? And price breaks up to an upside IV wall. It's open, right? And we're right in the IV wall zone. That's a pretty high probability reversion play right there, right? It works the exact same. Something I'll note while some people are typing, what Raga was just saying, those last line of defense setups are extremely high probability setups for reversion in whatever direction you're looking for. I used that on Qs and SPY yesterday. I've used it on multiple different stocks over the week. Like we caught the JD reversion, we caught the Now reversion, a million other different stocks. I'm not really I don't really work so much on the member plays. Someone said it was an initial unbiased glance of you. So that was SPY, and Let me see. So, okay, that 1015 that Raghav was showing was an old capture and it already played out. Number one. Number two, that was a glance at SPY after close, right? So, kind of what Raghav was showing is a little bit before that massive upswing and reversion. I've got a question for Raghav here as well. Raghav, when you draw your trend lines, what are you looking for to draw them?
So first of all, there's a quite misunderstanding amongst people that the trend line is actually just a line. So basically, what I've noticed for like with like 2 months of experience, like not 2 months actually, like almost a like 5 to 6 months with it, I've actually noticed that it's actually quite an area in the fractals that can give support to a trend line. And when drawing a trend line, I'd really suggest you to just draw your trend line from the lows. And actually, you need to just make like an area of the imprints if they are around. If the trend line is around imprints, you should mark that area for support because the trade automatically becomes high probability. Now, I mean, like, I really wanted to show my screen for the trend line, of course, but like we are having technical issues, so I can share in the launch what I'm trying to say, and you can definitely save it. And yeah, I'll definitely need to touch that topic for sure, but because of the technical difficulties, I cannot right now. So I need to definitely need to we need cover about this odds graph. You might be seeing that we have the frequency here. So the red line actually is the support, and the green line you can see, or the squiggly line you can see, is the resistance. Now you must be wondering that okay, you just need to just can you just move to the right hand side of the graph? Yeah, here. So you can see that all the flat areas you see are actually like the resistances if on the green line. And if you are looking for the support on the odds graph, the flat areas you see here, the support, and you might think that actually have a continuation kind of a support that is like a less probable support here. And you might be seeing that okay, say that we break that last resistance, that last resistance up there. So what should we expect after that? So after that, you need to just keep in mind that we can actually have an outliner move. So the green line is actually showing the hurdles that the price can have. So basically, if we just go above all those hurdles, yes, we can actually see an outliner move. So yeah, this was the important thing that most people actually don't know, but yeah, it's definitely useful and important to know about.
Yes, the odds graph is kind of showing the density graph in a different light. It's extremely useful. I don't really see a lot of people using it, but it gives you a really great idea from kind of what we were showing before of general price ranges, outlier move targets, last lines of defense, etc. Right? And thank you, Raghav, for
Bigun
touching on
just
that.
said a very important thing here. Sorry to interrupt. Bigun just
Oh,
said a
no
really
worries.
important thing here that the levels from the density graph, the volatility graph, and the odds graph are similar, and some levels you might see are actually like the same. So basically, all these three graphs are actually just trying to show data with different visual. And yes, you need to definitely, if you're trying to use spread monster to its like extreme level, you just need to use all these three things I've we just mentioned about. And on the odds graph I just showed right now how you need to use it. I can actually share a much more detailed uh, s- presentation for it so that you can actually use it more and more and gain confidence with it because I've gathered some results with the resistances we or the supports we see on the odds graph. So yeah.
Someone just asked when all of the Ivy Peak spaghetti start below or above the main spread monster graph midline. like we'd shown earlier. What do you do with that? So generally from what I've seen with my experience on cues is that's an implication or a directional play in whatever, wherever the peaks are in relation to the midline. But it's important to note that this can also result from contract skewing. Let's say it's OPEX or something like that. We've seen that recently with the May's OPEX that there was some skew. Milk RCG, we cannot hear. I don't think we can hear your voice on there either.
There we go.
Welcome, Milk.
How's it going, fellas?
Great. How are you?
Pretty good. Discord issues sometimes with the stages of that.
Yeah, I think we saved it though.
Oh, absolutely. Pretty remarkable stuff, we've been going over today. I guess I could potentially go over some of like the TOS stuff that I've been showing on the S&P. So I'm gonna try and share my screen on this desktop. Give me 1 second. All right, so we have, SPY up right now, and it's been pretty incredible kind of since inception when I started calculating for SPY, because Big Gun was doing awesome with that with QQQs, and just from my experience, I was like, okay, actually, just experience with like SPX, the derivatives market, futures market, SPY, it's all one big basket, right? They all correlate. They're just in different fractions thereof. So we know primarily the SPX market kind of controls the option side and kind of gives us these nice zones. Currently the SPX data from Yahoo is non-functional, but we can use, as you see, like with SPY, we can derive these IV points, these IV walls. So like Big Gun kind of goes over, or you went over earlier, we have, inner IV wall, and then we have our hard IV. I do have the data points for all the overflow. Beyond, I just don't have them on the previous, but I started including them this last week. So you can kind of see respectively, this week is somewhat of an outlier. It's not exactly an outlier, but since we had the holiday week, a shortened week, when market makers, funds, institutions, and everything price options contracts, they do so on a typical business week. So when we have these shortened weeks, holiday weeks, it can throw some skew into their model, so to speak. So that's where like this week we had, some moves out of our normal derived IV walls to our overflow levels, which are the gray dotted lines here. And those were respected very, very well. Even on every test. I mean, Friday was spectacular as well. I mean, that was just mind-blowing price action. But if we look back over the last, I've been tracking it for about 3 weeks or so, or testing it, data testing. But you can see every single day prior to the important holiday week, it's been without fail. Nothing's 100% ever. Kind of like what we were talking about last week when we did that little short call with MG. We were highlighting on a lot of this, but it's just very remarkable how we can see with our IV metrics that Russell's put into the spread monster density IV. Those are metrics that you will not find anywhere else. like old Black-Scholes, Greek models. I know that's still the standard for most people, or what they show retail, but there's other models that I'll use, because if everybody uses it, right, it's not really an edge. So it's big form. You see Russell highlight on us all the time. It's outdated. Like it's comparative to using like moving average or indicators. It's always going to be lagging. It's not going to be so much forward looking, even though you can kind of speculate on some Black-Scholes. But Russell is also working on a new kind of Greeks table, so to speak. That'll be something incorporated in future updates. You guys will never ever see anything like it out there. So that essentially this is only the beginning. Time. It's pretty remarkable what we are doing right now, but there's a lot more to come and a lot more to bring over into these systems. And every time a new update and integration, and makes the system more self-learning. So a lot of people refer to it as AI, when really it's machine learning. So the more we get everything over, the smarter it becomes. So just what we want to look into next week, I haven't put the values on here, but I kind of calculated for IV for this coming week, and for Monday, we're going to be looking at IV walls to be more respected, essentially, than getting to our overflow levels. We can still test them, but it being a full week on the look ahead, we're going to be looking more on the hard walls for those setups, and that'll be a good data test as well. So it's phenomenal. And then when we get the other servers and stuff going, where we can get some of the live data running on all those, you guys will be blown away. So to answer Chris G's question, so all the stuff on SPY, Milk has been utilizing spread monster tools for you. Yep. So, the options pricing market, what we derive on SPY on the density IV and on the fractal system, that's how we've been calculating these. And then I put a picture in chat, and the big gun showed at the beginning of this recording, it was like spot on for Friday. We tested our lower IV walls. I have my other data sets that show kind of bigger positioning in the market. When you have those confluences line up, it's insane. So we had almost on retrospect, looking, or I'm not showing my chart on futures aspect, but this is SPY. We were looking at that almost 70-point move on ES futures, and then we reverted all the way to the top of our IV. So on the conversion, you'll see that on my charts, on my motive wave charts that I post every day, you'll see these IVs conversions on there, the fair value difference projected forward. So pretty cool stuff.
Got a question for you, Milk. What do you think, I guess, the future of IV walls are, right? We've been testing the weekly a little bit for Qs and SPY. Do you think there's potential for a monthly IV wall using the OPEX contract? What are your thoughts on that?
Yeah, there's definitely more ways than one to utilize all the data. So we can do, our weekly projections, on the wave one. We're looking at, a look ahead when you click the plus button, looking technically, I guess, 4 days forward if you're deriving from the weekend into the next Friday. Now, you can also, look at the quarterlies. So a lot of the VIX and everything else, there a lot of option pricing models by standard are looking like 90 days forward, right? So that's kind of like how the VIX is calculated. It's the forward look of the next 90-day period or so. So if we kind of know that data, like if, in future updates, as Russell's pulling everything out, we'll be able to take probably a lot cleaner look on those longer swings that we're looking at off the IV metrics and the new Greek metrics that we'll have in the future that Russell's working on. And Rogue Moose, by the way. He's doing a lot of stuff behind the scenes. I know you guys haven't seen him super active in chat, but he does a lot of dev.
Someone's asking if you can show your ES charts to show how you incorporate the IV walls to help see people, to help people see its usage on futures.
Let me try and switch over. Stop share on this screen.
While Milk is loading up his chart, Raghav's asking for you to check Trade Lounge for some examples of trendline usage.
Can you guys see my screen for
Yes,
my
yeah, I can
futures
see it.
chart? Okay.
Yep.
So it's pretty predictable for the most part. Looking, when we were early session, we had core PCE catalyst data that came off at 8:30 a.m. And we always know, those larger data releases are gonna give us some volatility. So like when we have my zones, the milk mentees, the people I mentor privately, they can they have my custom data sets to kind of see what's going on when I have these positioning markers on my charts. And so as you can see, like opening up on PCE, our buyer's objective, we know on these initial points on the data markers that I have built that these act as risk off points, right? So we know this is where buyers want to go, but it also acts as an absorption marker. So actually sellers, there's, in any auction, there's buyers and sellers, right? So just because there's large volume, so to speak, on the buy side doesn't mean, they're going to exactly break through. So when we get to these huge data sets that I put on here, we know this is where buyers want to go, where they had previously put in a ton of effort to bid the market up. But we know in any auction, buyers and sellers, we know actually sellers are sitting there too, trying to absorb. So the initial test on this, was as a risk off point. And then when we see the other data that kind of pulls in, if you're looking at like tick data, you see the introduction of sellers stepping in. And so that gave us almost a 70-point trade all down to our LTF objective. Now this is way bigger time frame. This was a massive position from short sellers where they want to be. And we also know on the auction, there's sellers above, buyers below. Buyers were sitting there waiting to absorb all that. Now we have our volatility metrics, right? That I put on the charts every day, via yellow box. So we can measure those metrics every day in volatility ranges. So as you can see, when you have these confluences, my custom data sets, they give us this positioning. We have our volatility. When you have these confluences like this, especially, and then IV on top of it, like this was an excellent trade all day. I didn't get the chance to take the full range on this because I had to step out of the office, but Big Gun, showed that too in chat. He's like, reversion, low risk, high leverage, and that played out absolutely perfect. So that move even played out better than the initial short. And you can see all the way on the top of our IV, we had, our inner IV wall start here at 52.90.25. We had our hard IV and then we had our overflow level, one tick off. Kind of remarkable. I mean, this is pretty normal, day in, day out, like with our IV. So just like here, we ranged on Thursday, kind of stuck to the floor, a little bit of compression on IV. So walking in the session, we knew we had potential to range all the way up to our top side IV. But we've seen this on multiple days. Big Gun showed this as well. Some days we have our range set on IV metrics, where the options market is pricing in the market, where funds, larger players, institutionals are going to try and cap the session, via hedging. And so it's a rarity to blow through these. And this is where we get like kind of those positive exposure setups, where market makers will have to re-hedge and reposition. A lot of time to the downside, there's kind of an exposure point for those MMs where they'll have to offset their derivative positions and actually sell the market to be more delta neutral, because as a market maker, that's your job, right? You're making money off the spreads and the option pricing. You're not actually making money off the move, so to speak. So that's what their job is, to always stay delta neutral, risk adverse. It's pretty cool. There's a lot of mechanics in the market that it just takes time to understand, but try to relate all this information, on the chart, so to speak. So, I mean, every day we have a clean map of what's going on. We start to look at different confluences, just like Big Gun shows and Rob. It's just, there's nothing else like it out there.
So I was going to ask this maybe just to hear your perspective on what your thoughts on like using the OMM alongside just looking, kind of gauging price action through the IV walls. So just maybe just could you share your thoughts on like how we can even see like live market maker positioning or the options market specifically, and see how that kind of forms based on these walls?
Absolutely. So I don't have the OMM pulled up, but you guys see that in chat every day. So just like with any trading, so to speak, right? You kind of, for traditional trading, say you look at your large time frames, right? Say you're looking out on your 4-hour daily, whatever it might be. So you're looking at larger time frames, to get your large levels, right? So with IV walls, we can look at that as our large time frame, so to speak, right? We know for the day where market makers are positioned. Now, when we enter the session, when the options market kicks in, a little after 9:30 a.m., we can use the OMM functions to operate within our IV walls. So if we see the floor, ceiling, raise, or move, or stay, we know that that's a beautiful confluence that the floor is in. We already know what the IV projected for the full day, where our floor is looking to be. And then if that floor stays and that confluence is there, and then we start to see the ceiling raise, even though like opening up on the 9:30 RTH session, regular trading hours, we had our ceiling, kind of capping, and then we end up seeing it raise towards the end of the session. So you're using like the OMM within the bigger picture IV. It's almost like if you ever played the video game like ping pong, it's kind of the same thing in concept.
Last topic I was just had in my mind just to maybe briefly touch on. So Friday presented a really interesting opportunity for the options market due to some factors that kind of involve pricing of contracts, right? So we had, for example, on the S&P, the 525 call went from $1 a contract or 1 cent, right, to over $400 a contract or $4, right? And so, I mean, that's a 40,000% play. You're buying, you buy $50 on that. And you hold all the way up there. That's $20,000, right? So maybe just you talk about like how those mechanics kind of come from leveraging delta, theta, and maybe like IV crush as well, just briefly.
I mean, there's different ways to look at. It'd probably take an hour to go over all of the mechanics of that. But when you can identify those leverages, just like you were talking about in chat, getting those in the IV crush. If we're doing spreads, so typically, on stuff, if we're not doing high leverage, we can sell SPX spreads on these zones and use theta in our favor and actually capitalize on it. So that's what you're seeing with like rogue moves and stuff. I don't really post on it much, but I do my vertical spreads as well on SPX. And then you also see AVP. He's been doing awesome with that too. He has a lot of metrics and measures he's doing, and specifically build outs in the data warehouse where he's been pulling that data and sharing it with everybody. So he's another, kind of leading expert in the field. He's been doing it for years. I've known him as a close friend for quite a few years. So if you wanted to speak on that a little bit, Big Gun, on what you were just referring to.
Nice. Yeah, so I guess here's what I'll say for what I was trading on Friday, right? I'm taking puts a little bit after open, when I kind of there's several different confluence that are telling me to expect downside to the IV walls. Specifically, it was a last line of support set up on Qs using the density. Um, so that's what I played, right? And so what I benefited from that on that contract, I got about a 1,300% trim at my highest trim. I was in like the 20 cent area, I'm pretty sure, on that contract. So from that, I basically leveraged delta, right? I bought way out of the money when my contract is at a low delta, and delta is representing the options price movement related to the stock, right? So an 80.8 delta is 80% of the options price, or excuse me, of the stock's price is reflected in the options movement. So I'm buying really low delta contracts around like the 10, 30 area, and then using that to leverage a high volatility move. Now, for the reversion play, this was the huge leverage move right here. It's coming from implied volatility crush as we compress after a huge move, and then it's coming from leveraging delta in the same way that I talked about before, and it's also leveraging theta. That's at like around 12:30 p.m. roughly that reversion starts. So you've already experienced a substantial decay on contracts, especially when we're in a severe trend earlier in the day. There'll be, I guess, the call side's contracts will be worth a little bit less, right? So that's why you can get those opportunities for like a $1 to $400 contract. Not everybody is, understands the risk to trade that. So what you would want to look for more is like a, $5 to $20, $30 contract, and you will experience some massive leverage for that specific move, that reversion move that I'm talking about. It's a pretty huge thing. I'm making a video kind of way more in depth talking about that, but for the options market specifically, Friday was a very lucrative day to trade.